Money is simply a medium of exchange, a tool designed to solve the problem of bartering. It represents trust, allowing us to trade goods and services with ease today. Originally based on rare commodities like gold or silver, money was a physical asset. Over time, it evolved into representative notes backed by those reserves. Today, most global money is fiat, meaning it has value because governments declare it legal tender. Its power relies on our shared belief in economic stability. Banks work by managing the flow of capital, turning deposits into productive loans. This system expands the money supply, fueling businesses and innovation daily. Central banks act as the architects of this system, using interest rates to balance growth and inflation. They aim to keep the economy moving at a steady pace. Inflation occurs when too much money chases too few goods, decreasing purchasing power. It acts as a hidden tax, eroding the value of savings over the long term. Digital money is now the standard, as most currency exists only as entries in private ledgers. This shift has made transactions nearly instantaneous and borderless. The velocity of money measures how fast it moves through the economy. When people spend confidently, money changes hands quickly, driving strong economic growth. Cryptocurrencies represent a new, decentralized evolution of how we view money. They offer a way to store and move value without relying on a central authority. Global trade depends on the exchange of different national currencies. Markets constantly determine the relative value of these units based on economic performance. Credit allows us to pull future value into the present moment. By borrowing money, individuals and companies can invest in assets that grow over their lifetime. A strong financial system requires transparency and law to protect users. When trust in these institutions fades, the value of that currency is tested in markets. Money serves as a store of value, allowing us to save labor today for use tomorrow. Choosing the right assets to hold this value is the essence of investing. Compound interest is the engine that makes money grow exponentially over time. Small, consistent investments today lead to massive wealth in the coming decades. The international system is built on the dollar as a reserve currency. It serves as the primary unit for pricing commodities and settling global debt contracts. Technological shifts like tokenization are changing how we track money. Smart contracts allow for programmable money that executes trades without human oversight. Scarcity is a fundamental feature of sound money, preventing reckless dilution. Whether gold or Bitcoin, people gravitate toward assets that cannot be inflated. Wealth is not just the amount of money you have, but the assets that generate income. Moving from earning to owning is how you achieve long-term financial freedom. Global financial infrastructure is becoming more integrated and digital. Payments that once took days now settle in seconds, reducing costs for businesses globally.